Hey YouTube, this is City Prepping. In this video, I'm going to cover two main things in this video. I'm going to cover the issue of inflation, what I'm personally doing about it, and then in the second half of the video, I'm going to do a video response to a video that the Canadian Prepper did about 5 weeks ago regarding cryptocurrency. And in that video, he asked if I would respond my channel with a position on why I am for cryptocurrency. Obviously, in his video, he posted why he's against it. And what I'm going to try to do is weave these two issues together, inflation and cryptocurrency. So, before I jump in, let me just say, please ignore any comments in the comment section below from City Prepping that may have my name and my logo. It's easy to set up a fake account with my name and my logo, but unless you see a check mark next to it, that's not me. My account is verified on YouTube, and you'll see a little check mark whenever I go and comment in the comment section. So ignore anything from me that you don't see a check mark because, well, that's not from me. So I've been chatting with subscribers, and one of the questions that I get is, a lot of times is, what can you practically do about inflation? We're seeing this happen in real time around this. You go to the food, you go to get some food at the store. You're seeing the cost of food either go up, or you're seeing the same price for that product, and you're seeing that product actually getting smaller, shrinkflation. I just recently did a video. I'll post a link up in the cards above where I talked about this issue. And another video that Brad over at Full Spectrum Survival did about a week ago is he discussed the issue of lumber cost inflation. We're seeing, I believe in some places, the cost of lumber go up 250, 270% in the impact that that's having on housing development. One of the things that you'll often hear in the media referred to as CPI, or Consumer Price Index, the Consumer Price Index report. According to them, their report, it shows that in the last year, we're seeing only a 2% inflation. Right. So obviously we know that's not the case. And I believe there's different reasons why they reported low. But from what I'm studying and what I'm looking at, the numbers I'm seeing are closer to 15 to 25% when we look at inflation. And the big challenge in all this is that while we're seeing the cost of living go up, the incomes for most Americans that are on fixed incomes, they're not rising, nearly at the same level at which inflation is occurring. And to top it all off, the government just did their $1.9 trillion stimulus, where they're essentially, continuing to inject money into the economy. This was done last year. And what you're seeing as a result is you're seeing a devaluation of the dollar. As they flood the markets with more and more, United States dollars, we're seeing the value of that dollar go down. So there's two things I'm personally doing to prepare for this situation. And, to get to the first question again, people are asking, what can you do about this? I look at it from two levels. I look at the practical first, and by that I mean investing in items that will help me hedge against inflation, things like food storage. If I can buy food now, well, it's cheaper than in a year from now, and I store it away, and I can consume that over time. Obviously, I'm buying it at the cheaper price. Now, things like freeze drying, I'm doing a lot of that with chicken. I believe in the next few years we'll see the price of meat continue to go up and up and up. So I'm able to put back a substantial amount of meat at this time, and it can last for up to 25 years. I'm getting solar installed in my house in about 3 weeks. The price of electricity goes up 8% annually where I live. And so within about 5 years, I'll have a return on investment on that. And after that, I'm able to produce it for free, essentially. Gardening. I've done a lot of videos on the channel talking about gardening, and I'll continue to do so. There's going to be a lot of updates over the next few weeks, along with chickens. And what I'm trying to do is build an environment on the side of our house, and eventually we'll put it in our entire backyard, where we're able to produce a sizable amount of our food that we need to survive as a family. And again, we're no longer going to be dependent upon, the stores, which again will help us drive the price down. Overall, I'm trying to stack things now and kind of front load, so to speak, things now that will help us deal with these issues of inflation. Now, the second thing is in regards to finances. For me, there's two ways you can look at finances. I always view as a defensive position you can take or an offensive position. Defensive is, learning to cut back on your cost of living. Those are practical things. But I think what a lot of people forget to mention is going on the offense and growing, your income, finding new ways to generate revenue streams. I own two primary businesses. One I've shared about a lot on this channel. I own a web development agency. I've had it for about 15 years. We're trying to grow and expand that. This YouTube channel I consider a business at this point. I invest a lot of time and energy to try to provide, a lot of great information. And what I'm looking to do is invest time in both of these to continue to grow them, to essentially help generate more revenue streams for my family so that we, are not having to worry about, getting behind as the bills will inevitably increase. And I'm always looking for investment opportunities. Now, you can go, I know I have a lot of friends that are looking at traditional assets. and we're seeing a skyrocket in your traditional assets, things like real estate, stocks. And essentially, with the real estate industry, we're seeing the price of houses go up dramatically in our area over the last few months. As you know, the feds have lowered the interest rates, and that drives real estate up because people can get the same house, for cheaper monthly payments, even though they're essentially buying it for more because, again, they can afford the payments. The feds are injecting money into the economy, and they're driving up stocks as well. We've seen that happen a lot in the last year. There's been this kind of a disconnect between Wall Street and Main Street. And that's the reason, is they continue to buy up bonds, they continue to inject stimulus in, and it's driving the price up. And this is going to be the new normal, I believe. We're going to see the price of assets continue to climb. And, you can either fight against it or get on board with it. Unfortunately, most lower income, middle class, they can't really afford to pick up, additional assets or traditional assets. And again, that's why the wealthy in these scenarios always tend to get richer, because they are doing this and they continue to do this. So the question came to me as I begin to look at the traditional assets, and I begin to ask, what long-term asset should I buy? Again, I've talked about this at the beginning of the year. I do plan on getting into real estate toward the end of this year, but I decided to put that on hold for these particular reasons. Traditional assets, I would encourage you to look at them if you have it already. I'm not a financial advisor. I'm not telling what you should do, but at least become literate and understand and study and find ways to pick up assets where possible. Precious metals, while I have them, I don't see them as a strong long-term investment for various reasons. There's not a finite source of precious metals. They can always be mined and, continue. As the value goes up, more mines will open, and you continue to see a devaluation over the long term. That concerns me. Stocks, they're propped up by the government, as I talked about a second ago, with the government coming in, buying up bonds. Real estate, it's subject to taxes and maintenance. And again, I do plan on getting into real estate probably within the next year, but for now, I see something personally that I see as a much better opportunity at this moment. This kind of segues into the second part of this video, talking about crypto, and namely Bitcoin. I'm not what I would classify as a Mad Max prepper. I don't really anticipate a scenario in which the world goes to hell in a handbasket, EMPs, the whole 9 yards. I see a lot of challenges coming on the horizon over the next 10 years, but I'm only pointing this out, because again, Bitcoin crypto, it's not a SHTF asset. It's not, it's for the times when the grid is up. And so I know a lot of people are going to run to the comments section and say, hey, well, what if everything happens, EMPs, yada, yada, yada. Well, yeah, I admit, okay, in that scenario, crypto, it's not really an option I would consider. But let me give you the reasons I personally am viewing crypto from a positive position. I started off, and I mentioned a moment ago that I work in tech. And one of the lessons I've learned is to always monitor what's coming next. You got to kind of stand on your tippy toes and look over the horizon and try to see what's coming next so you can prepare for it. And when you do so, you put your business in a better position to grow. So trying to look a little further down the road, the only non-correlated asymmetric return asset that I personally have found is Bitcoin. Equities are tied to things like earnings, GDP, interest rates. And Bitcoin is not tied to anything. It's non-correlated. Asymmetric return simply means it has the potential to grow at rates that really nothing else can. Do I anticipate that, Facebook, Amazon, Google will just continue to see, 100% returns year over year? I mean, just rapid, aggressive returns? Probably not. I think they're pretty much topped out, traditional stocks. But Bitcoin, year over year, for the last 10 years at least, has been the best performing asset over the last decade, 200% year over year returns. And at the moment, from what I'm studying, this is a conclusion I came to based on a lot of studying, I believe that it will continue to have great gains over the next 5-10 years. At the same percent, 200%, I don't know, but it has the capability and opportunity. I think we're at the bottom of what's called the S-curve, where there's early adoption. As things take off, that's where you see a lot of people get on board. And then when it hits the top of the S-curve, that's when it kind of levels and plateaus off. And I still believe we're here at the bottom of this S-curve as far as early adoption and the ability to get in at a price point, I'll put it that way, where it's still affordable. Now, the thing I love about crypto and Bitcoin in particular is that it is a disruptive technology. Again, I work in technology, and it's always fun to see companies like Uber and others come in and challenge the industry, things that have been in kind of a stronghold position for a long time. And they come in and they provide a better solution. And, for me, as I look at different assets that I can hold for a long period of time and eventually pass those over to my children without heavy taxation and earn while it grows is crypto. I just have not found any other asset that can do quite what it can do. As long as you have the keys to your Bitcoin, to your crypto, you own it, and you can literally transfer it to anyone. I can put those on a ledger and pass them off to my grandkids one day. And I know a lot of people are going to run to the comment section and point out, hey, there's a speculative aspect about it. And I believe that that speculative narrative is gone. Institutions are moving in. There's a lot of data points. I think the market has spoken very clearly. At the time of recording this video, Bitcoin has a $1.1 trillion market cap. And I'll talk about that a little more in some of the points that Nate brought up in his videos. And one of the things I've learned, and again, working in tech, is those that don't adopt or won't adopt new technology, they inevitably get left behind. The ones that won't adapt to what's happening, they get left behind. And my thesis and the conclusion I came to after studying Bitcoin is that it's volatile, but it's not risky. Risky would imply that it's just going to go to zero tomorrow. Again, it has been tested backwards and forwards, and it's held its ground. And it's, while I don't think Bitcoin is perfect at this time, and I'll talk about this in a second, the volatility aspect is the only thing that, if you're getting into crypto, you should be concerned about, because we're at some pretty high highs right now, and you could get in today and it could drop 50% tomorrow, and then this time next year it could be up 200%. It moves very quickly, I'll put it that way. And again, I wouldn't consider myself a Mad Max prepper. But I do try to prepare for the future. And that's one of the things I think in our community that's often overlooked is that people will, avoid investments because their view is that, hey, it's all going to go away tomorrow. That's not my personal position. I think we will see and continually see changes in the financial market, especially after the issue with the GME debacle, where a lot of people are moving more and more into the DeFi market. And again, I know I ran over a lot of points very quickly, and I'll probably do a video that goes way into a much deeper dive on this. But those are the reasons and the conclusions I came to. And again, I apologize if I'm glossing over a lot of things, but it's definitely a video that could be a standalone video talking about this. Now, as I mentioned at the beginning of the video, the Canadian prepper, he did a video on Bitcoin about 5 weeks ago. I would encourage you to go check out that video. I'll post a link in the cards above. If you haven't done so already, subscribe to his channel. It's one of my favorite channels in the prepping space. And he takes a negative anti-Bitcoin position. I, on the other hand, am taking a positive pro-Bitcoin position. Ironically, about a year ago, we spoke, and he was actually introducing me to Bitcoin. What happened, Nate? I'm not sure why you moved away from it, but he lists out some reasons that I think that you should consider, and I'll talk about these and address these. His complaints really boil down to this, and I tried to summarize them in this video, and I'll give kind of initial responses here. His first thing is, in a major SHTF scenario, it won't be useful as all computers will be down, as precious metals will have more value. For that point, I do agree 100%. Crypto is not a true SHTF, end of the world, as we know it, you name it, doomsday situation. Maybe in a potential long-term rebuild, but not in the initial grid down. In that case, yeah, go buy precious metals, and I own precious metals, and I'll continue to hold that position. But I don't see it as, again, an item that you would want to, necessarily hold in that situation. Maybe you would if you were looking from the perspective of, well, when the grid comes back up and the banks have been destroyed, having the blockchain technology with your information stored in ledgers all over the world when the grid comes back up, yeah, I could see that as an advantage, but I'll concede on that point. One of the other things he brings up is that it can be traced. Your transactions are not anonymous because they're stored in the blockchain. Yes and no, I agree kind of to a point on that one. Technically, you can avoid, or rather you could set up a different account under a name or an ID with a VPN, maybe offshore, and you could do transactions that way on the blockchain. But I don't do that personally. It's not considered legal. I mean, the laws, they're only going to get tighter and tighter and tighter on blockchain over the next few years, especially within the tax code and stuff like that. But there are ways to get around it. It's just I would encourage people to do it, and I don't do it. Taking money away from hard assets. That's one of the other points he brought up. The money that typically would have gone into real estate, preps, that's now being added into the crypto space, which the entire crypto space, I forget the market cap, I think it's about 1.5, 1.6 trillion in total at the time of the recording of this video. And to that, I would argue, yeah, I understand that it's being pulled out of the traditional assets, but if you get a superior asset and people see this as more valuable, I think over time the market will speak and people will continue to shift over. So I don't really see that as a argument to say against Bitcoin. If, once you get your preps in line, once you get real estate or other things that you feel are important, then I would advise to look at that, at least as an option. That's my position. I've got the other thing, my other ducks in a row, and now I've turned to this for the reasons I mentioned earlier. So one of the issues that he brings up next is regards to speculation. And I talked about this a second ago. I think the market has spoken, it's got a large market cap in the crypto space. I think the speculation narrative, I think, is maybe 5 years ago, maybe even 2 years ago, that might have been somewhat true, but I think that time has passed. He brought up the pump and dump schemes that you see a lot of times. Again, Bitcoin has become, it's got a $1.1 trillion market cap. I believe that number will probably hit 10 trillion within the next 5 to 10 years. It's going to become harder and harder and harder over time for manipulation to occur. The smaller market cap cryptos, yeah, you're still seeing that happen. So I think it's just a issue of time on a lot of the coins. He brings up the almost view that, kind of a religious view that people hold with regards to Bitcoin, almost a worship and kind of a faith approach in a sense of, ignoring some of the obvious issues. Yeah, I mean, that happens for sure. I mean, I know there's a lot of people that treat it like religion. I'm a very pragmatic person. I just look at things from the perspective of, certain goals that I have, and I do research, and it's been hard. I've had to strip my emotions out of it. When I got into crypto last July, the market was much smaller. I mean, you could buy a Bitcoin back then for 97. Today it bounces between 55 to 60K. And so, for me, again, I just look at it from a pragmatic perspective. It's performed the way I, was hoping it would, and I foresee it will continue to do so. One of the things he brings up is that it's not a productive asset, meaning it in and of itself, it does nothing, and he compares, for example, if you were to go buy a Tesla stock, you're investing in a company that's going out there doing things. They're building rockets. They're, building these electric cars, etc. I guess my response to that is, it's no different than buying, metal, precious metals. I mean, it's not a productive asset. It's a piece of rock that was mined, and it's just sitting there, does nothing. So, historically, the kind of the narrative for Bitcoin in particular was that it is a means of monetary exchange. And I think the narrative in the last year has really become more that it's a store of value, and that's really the way I see it. It has the ability to be, a monetary exchange item, and I think we'll see that continue to grow as it stabilizes. One of the other things that he brings up is Bitcoin is as unequal as the fiat system, and the point he was making is that it's creating inequality because the cost of Bitcoin is being driven up. And what he's saying is that the current monetary system is locking out a lot of people because, again, we saw the GME debacle and it kind of pulled the curtain back on how rigged our systems are in our country. We're seeing a lot of low-income people or, the younger generation, the millennials, trying to come into the markets where they can't get a house. There's a lot of things they can't afford. And his concern is that, Bitcoin initially was designed kind of as a libertarian freeing system to open it up to the masses. And you're seeing a lot of these institutions coming in and driving up the costs. I guess my answer is, well, then get on board with it. It's going to be, I think, within, a year or two from now, it's going to be, I have no idea what factor, increase it will be, but it will be substantial. And so I would encourage people, even if you can get, a tenth of a Bitcoin right now, which would be, about $5,500, you can buy in Satoshis. You don't have to buy a full Bitcoin. You can buy, whatever percentage of a Bitcoin you want. But my answer is get in while you can, because I think it will only continue to climb, and that's my position. One of the things he brings up is the mysterious origins. If you study Bitcoin, and I'm not talking about the other cryptos the other coins in the crypto space, but Bitcoin itself has kind of a mysterious origin. The name often assigned to the original creator was Satoshi Nakamoto. We don't know if that was an individual, if it was a group, but it was a person or group that essentially put the thesis together. They engineered this, they put it out to the community, they got feedback, they made changes, and then they eventually set it live. So they weren't going in and creating or buying up or holding a lot of the crypto when it first started. They were part of the original mining groups. I'm sure they mined quite a lot at the beginning. But you see, for example, in the altcoin market now, typically what happens is when they release a coin, the original founders will own a percentage of it, or they get certain buybacks over time. Bitcoin was done that way. Whoever originally founded and started it, they have to mine just like everybody else. So I don't know. That's my position on that. One of the things he brings up is that it requires a substantial amount of energy to operate. That I do see as a big problem. If you set up a mining rig out in your garage and you decide to start, mining Bitcoin, it's very expensive to operate that. And that, I would argue, that is a problem that hopefully will be solved in time as we, as a country, as a world, move to renewable energy sources. Hopefully that issue will be dealt with. And again, one of the other things he brought up is the divestment from the rest of the market. Pulling out money from real estate, traditional stocks, all these other things. You're seeing gold ETFs go down. And again, my conclusion I came to was that it's a superior asset class. If you find something that's better than what's out there and you decide, the market rather decides to move in that direction, that's just how free, an open and free market works. So I guess personally, I just don't see that as an issue. One of the other items he brings up is that it may lead to a global conflict. If, let's just say, a country like China, they mine a good percentage of Bitcoin. What if the government decides to come in and starts dumping empty blocks onto the blockchain for Bitcoin? The beauty of Bitcoin is that the code base can be altered by a majority. I think it takes 51% for changes to be made. So it's not a static system. It's living in a dynamic, and it can be altered if the community decides to do so. So if something like that were to happen, I would like to believe that the community would get behind it and make changes. And one of the last points that he brings up is that Bitcoin is not the best Bitcoin. He brings up the example of MySpace versus Facebook. Look, MySpace, I don't know what their total value ended up being. I believe it was under $1 billion. Facebook, God knows. I mean, it could be close to $1 trillion or half a trillion. I haven't looked at their numbers, but the point I'm trying to make is that Bitcoin as of today is at 1.1 trillion, their market cap. So MySpace didn't even come close to that. So I think the markets have clearly spoken that Bitcoin at the time is a winner. If down the road it's not, and a new coin comes out that can beat or compete, I will consider moving over to it. So all that to say, I'll finish up by saying this. I don't personally ever plan on using my Bitcoin in any type of monetary way, as a medium of exchange. I simply see it as a long-term investment that I eventually will pass off to my children and grandchildren. And I'm only bringing all this up because at this time, I'll do a much more, in-depth video about this. But the things that Nate brings up, they are things that you should review and should study. And there's some criticism that I think are out there that are valid and just. But as any new emerging technology comes out, there will be issues. But if you look at when Amazon first came out, it came out, it took a big nosedive, it went up, it had its own issues, but here it is today. And like so many other technologies, when they're disruptive, I always get excited. It's just the nature of what I do in my industry. I'm used to things moving and changing quickly. So I guess for me, seeing this doesn't upset me, something that's moving and changing so quickly. I just see it as an opportunity. So I'd love to hear your thoughts. If you made it this far in the video, I'd love to hear your thoughts, your feedback in the comments section below. I'm not by any means trying to convince anybody to get on board with Bitcoin. I would encourage you to at least study it, because once you study it and understand it, you have a much better understanding of our monetary policy, the Fed, how markets are controlled and manipulated. It will educate you, I'll put it that way. It will definitely give you a different view on finances. So as always, please stay safe out there.